Greetings to all the students of the Department of Banking and Insurance. It is a matter of pride for our institution that for 12 years running, the students of TYBBI have been organizing the Insurance MELA. I have been a part of this MELA several times, and the initiative and the creativity which is shown by the students is something which is unparalleled. What is the motive of this insurance MELA? If I look at our own country and look at the percentage of students, percentage of people who take insurance coverage, it is remarkably low as compared to, in fact, some of the developing countries. And therefore, there is a need to send a message to the common man why insurance is important. In this context, I admire the initiative which is taken by our banking and insurance department to organize this insurance MELA, and through this MELA educate not only our students but hopefully even the common man why insurance is important and what are the various products available. So once again, I welcome all the guests who are looking at this video on Insurance MELA, and I wish all the students all the very best and congratulations for hosting this event for 12th year. Thank you.
Hello everyone. Today I am going to talk about health insurance. What is health plan? Imagine you are sick. Will your insurance get your doctor at home? Will it send ambulance at home? The answer is no. No. You have to arrange all by yourself at the time of need. Insurance may only reimburse you later. That's why you need a health plan, a personal health service. No age limit, no questions asked. Don't wait any further. Go and take your health plan today.
My name is Shraddha. So I am here to explain about what is health insurance. Health insurance is an arrangement with an insurance company which helps you to afford the cost of the health care. So health insurance works by spreading cost among members. Health insurance can be paid by one person, and health insurance helps you to pay for the others.
So basically there are three key points of the health insurance, and first one is group health insurance. It is employer based. Its discounted coverage is for large pool, mostly for the healthy people. Cost of the premiums are spread by both the employers and the employee. Now the second one is individual health insurance. According to the name itself, it covers generally the individual person or a family. Then it is entirely paid by the purchaser itself. Premiums typically vary by the age of the purchaser, but it has very fewer benefits than the group health insurance. Now the third one is government sponsored health insurance. It is obtained through a government agency or a program. Usually it requires very special conditions, though we can say that maybe elderly people, elderly income people or low income people or children, veteran or active service members. And similar to the name itself, it splits between the government and the insured.
What is property insurance? It takes a lot to keep your business up and running, like the space and equipment you rely on. All of that needs to be protected.
That is why you need a commercial property insurance for your business. It is about way more than just insuring your building. Suppose there is a fire, smoke damages or your inventory, or theft breaking in steal or your equipment. Commercial property insurance provide financial support to help pay for your losses in the event of sceneries such as these.
Your property likely plays a key role in the operation of your business. Beyond your building, if you own it. Property coverage can also include your office equipment, whether owned or leased, your inventory, your electronic data, and even outdoor items like fencing or the sign out front. It typically covers losses caused by fire, theft, damage from vehicles, acts of vandalism, and more.
Don't let an unexpected property loss throw off the plans and aspirations you have for your business. Know that not all property insurance is the same. 40% of the apartment does not have the right amount of insurance.
30% of them does not have security guards to protect personal belongings. About 40 to 50% of apartments are built with the purpose of both market as well as household. Thank you.
Hey guys, warm welcome to everyone. Today's topic is marine insurance. Here we will be discussing about the meaning, types, claims, advantages, process and importance of marine insurance. So let's start about the introduction. Marine insurance is a type of insurance policy that provides coverage against any loss or damage caused to cargo vessels, ships, terminal, etc. in which the goods are transported from one point of origin to another.
Importance of marine insurance. Marine insurance is required in many import-export trade proceedings. Admitting the terms, both parties are liable for the payment of goods under insurance. However, the subject matter of marine insurance goes beyond contractual obligations, and there are several valid arguments necessary for buying it before dispatching the export cargo. Goods in transit need to be insured by one of the three parties: the forwarding agent, the exporter, or the importer.
Types of marine insurance. Number 1. Freight insurance. In freight insurance, for example, if the goods are damaged in transit, the operator would lose freight receivable and so the insurance will be provided on compensation for loss of freight. Second, liability insurance. Marine liability insurance is where compensation is brought to provide any liability occurring on account of a ship crashing or colliding. Number 3. Hull insurance. Hull insurance covers the hull and the torso of the transportation vehicle. It covers the transportation against damages and accident. Number 4. Marine cargo insurance. Marine cargo policy refers to the insurance of good dispatch from the country of origin to the country of destination.
Advantages of marine insurance. So the very first advantage of marine insurance is that it provides overall coverage against a wide range of risk measures. It also helps in the smooth functioning of trade activities, as business can be carried out without worries about losses in case of mishaps. It also provides financial stability to the concerned party. And last but not the least, it also covers costs such as damage of goods, labor cost, legal charges, natural risk, accidental situations, and more.
The procedure involved in taking out the marine insurance policy is Step 1, selection of the company. Step 2, selection of agent or a broker. Step 3, marine declaration form. Step 4, assessment of the risk. Step 5, payment of premium. Step 6, issue of cover note. Step 7, issue of policy.
Documents required for claim process. To make the claims under the marine insurance and be able to reap the benefits, the correct documents should be submitted. In case of any lapse, there is a chance of the risk being rejected. Some of the documents are duly filled in the claim form, original insurance certificate with the policy number, copy of bill of lading, survey report or missing certificate, original invoice, packing list, shipping specification, and copies of correspondence exchanged.
What is life insurance and how does it work? There are many unexpected things that occurred in our life. We might pass away due to an accident or we might pass away due to an illness. But there are one thing 100% sure, that is we will pass away someday in our life. Insurance is product designed to provide you a measure of protection at least financially shouldn't disaster happen. And life insurance is specifically designed to protect the beneficiaries financially if you are passed away one day.
Life insurance is a contract between an insurer and a policyholder in which the insurer guarantees the payment of death benefit to the named beneficiaries upon the death of the insured. To put it simply, you pay a sum of money called the premium to the insurer, and when you passes away, beneficiaries, usually your family members, get a lump sum of the money called as death benefit. Now the next question is, should you buy a life insurance? You should buy a life insurance if you have anyone who may depend on you for your financial support, for example your kids or elderly parents. However, if there is no one that requires you to support financially, then life insurance is not required. Now let's take a look at the typical example of life insurance.
We have John, 50 years old, sole breadwinner of a family, with wife and 2 lovely kids. Like most families, John has a property or mortgage. 20,000 kept aside in cash, and the same amount he owes 20,000 creditor and debt. Now, if one day when John passed away is estate distributed, firstly 20,000 cash aside by taken away by creditor. Secondly, he is the only one working in the family, his property and mortgage taken away as well. This means family will have no money, no shelter to survive. His kid might also be a no college fund needed fund education. But wait, all these problems avoided if John has a little life insurance. Now let's take a look what happens when John did purchase a life insurance.
If John did purchase a life insurance policy, his commitment will be to set aside a portion of his income and give it as a premium to XYZ Insurance Company. Upon John's death, XYZ Insurance Company will provide John's family a lump sum that is called the death benefit, which would go to his family. Now, this lump sum money can be used to pay off his mortgage loan, his family's expenses, and in most jurisdictions, this sum of money is being protected from his creditors. His children now also have the required money to go into college now. Now you see why life insurance is important to everyone with a dependent.
Hello everyone, today we're going to talk about travel insurance. With the increase in travel, one of the important things that travelers need to know about is the travel insurance. This form of insurance helps cover a whole range of uncertainties and scenarios that can drain out a traveler's finances. Travel insurance is usually taken from the day of travel till the time traveler reaches back to India. Taking travel insurance ensures a comprehensive coverage in case of any emergency in another country.
I'm going to talk about travel insurance and what all comes under travel insurance. First is trip cancellation, then comes baggage and personal coverage, then health coverage, risk coverage, travel delays, purchasing travel insurance, and bottom line.
Trip cancellation. This is the most common type of travel insurance in India. The option bails you out when due to unforeseen circumstances like illness, death in the immediate family, sudden business conflicts, and weather-related issues. You have to cancel your trip at the last minute. If you don't have a travel insurance, you will be left to bear the burden of paying flight delay or cancellation charges, hotel cancellation charges, etc.
So I will be telling you about baggage and personal effect coverage. It protects lost, stolen or damaged belongingness during a trip. It may include coverage during a travel to or from a destination. Most carriers such as airline reimbursement traveler if the baggage is lost or destroyed because of their error. However, there may be a limitation on the amount of reimbursement. Therefore, the baggage and personal effect coverage provide an additional protection layer.
Health coverage. While traveling abroad, people assume their health insurance will be valid during the whole trip. However, this may not be true. This may depend on the kind of insurance you have gone for. A single trip insurance covers you for a specific trip, while a multi-trip policy covers you for multiple trips in a given time period. Condition may also apply on the number of trips and maximum duration. Also, domestic travel insurance policy does not always cover pre-existing conditions, while international travel insurance with medical cover accounts for such things as pregnancy-related emergencies and accidental death, injury or funeral-related cost.
Risk coverage. Domestic travel is not as risky as international travel. International travel insurance account for life-threatening condition, including plane hijacking. If an accidental result in death, disability or serious injury to the traveler or a family member accompanying the traveler, an accidental death and flight accident policy pay benefit to surviving beneficiary. General exclusion will apply, such as death caused by drug overdose, the death resulting from sickness.
Travel delays. International travel insurance often covers flight delays, cancellations, and emergency hotel services as well. For domestic travel, this is not always the case. Travelers often have to obtain proof of flight delay and cancellation before applying for reimbursement from their insurer. International trips are generally more expensive as well, so it is wise to obtain insurance that accounts for such emergencies.
Purchasing travel insurance. Travel insurance will vary by the provider on cost, exclusions, and coverage. The buyer should be aware of reading all disclosure statements before they purchase the insurance. Coverage is available for single, multiple, and yearly travel. The bottom line. In this post-COVID-19, even if you haven't purchased travel insurance before, you might want to consider it now. The main types of travel insurance include trip cancellation or interruption coverage, baggage and personal effects coverage, medical expense coverage, and accidental death or flight accident coverage.
The bottom line, in this post-COVID situation, if you haven't bought travel insurance yet, you might want to consider it now. The main types of travel insurance include trip cancellation or interruption coverage, baggage and personal effect coverage, medical expense coverage, and accidental death or flight accident coverage.
Word of caution: before signing into the dotted line, it's advisable to check the coverage point, the scope of the insurance, as well as the cost which you would need to bear in case of any issue. Be sure to research well and confer with the people who have little knowledge about the various types of travel insurance policy, including your travel agent. You can also easily check, compare, and buy the insurance online in India.
This morning, I would like to present our new topic, health insurance fraud. Health insurance fraud can be clarified as a circumstance where an insurer or a medical service provider furnish fraud, false or misleading information to the insurer with the intention to achieve out-of-line profit from a policy for the policyholder or service providing source. So, let's look at an example for the same. Ramesh is a working guy. In his 40s, he was diagnosed with diabetes. Then after some days, he decided to take health insurance policy, but he did not mention about his serious medical conditions in the policy. Even at the time of medical, he said physician to give good report, and physician also did it for the sake of money. Ramesh did not mention his illness to get policy at low premium. Few months passed, Ramesh suffered a brain stroke due to high sugar level. Later, he asked to get a surgery and he got it done. Then he claimed for the insurance, which get approved, and insurance company reimbursed all the expenses made for the surgery. So this was one example out of 100 on how insurance companies are fooled with, which cause loss to the company.
Now we will see what are different types of health insurance fraud. First, opportunity fraud. Opportunity fraud is described as when any information which is inaccurate or misleading. It is typically done by a policyholder to ensure that they get the underwriting in their favor. Second, deliberate fraud. Deliberate fraud is described as when an accident or loss that is covered by the policy is presented purposely to get the benefit. Third, external fraud. External fraud is committed by policyholder, beneficiaries, vendors against a company. Fourth, internal fraud. Internal fraud is committed by agents, manager, and executive against a company or policyholder. Impact of frauds. Whether claim money is paid or not, fraud impacts the insurance industry in multiple ways. If the claim is paid, then it affects the claim ratio and actual pricing, which in turn affects the reinsurance rating and triggering more stringent underwriting norms that may cause aversion among the genuine public to take policy with the company. If the claim is not paid, it has multiple effects due to spread of news about higher reputations, which in turn may affect business and also the faith in the industry. Hence, the best part will be to nip the frauds in the budding stage itself so that the business itself is not underwritten. Fraud mitigation. Today the situation is such that if a claim is found to be fraudulent, the insurer just repudiates it. It does not go beyond that point as its financial liability is eliminated. The unfortunate reality is the fraudster goes scot-free and continues this practice with another insurer, and vicious cycle keeps repeating. Fraud detection mechanisms have to be robust and effective in eliminating any attempt to defraud the company. There are basically two techniques through which fraud can be combated. First, human interface improvisation. Second, technology and process interface. So, following are some ways through which fraud can be combated. Welcome calling, Dr. Seeding, robust investigation unit and mystery shopping, training and communication, RAG analysis, effective fraud detection, regular audits and internal control, propensity modeling, control through insurance covers, fraud investigations.
This is Ankita Nagre here from TYBBI. Our whole group is presenting about motor insurance. Now, let us know about what is motor insurance. Motor insurance is an insurance policy that covers the policyholders in case of financial loss. Let us all know about Motor Vehicle Insurance Act. The Motor Vehicles Act 2019 came into effect on September 1, 2019 with an intention to curb the road accidents in India and boost the road safety. Motor Vehicles Act 1988 has led to the introduction of fresh penalties and license requirements for the vehicles, along with the new operating standards for personnel. Let us move on to how is premium calculated in motor insurance. The basic premium is calculated as per the Indian motor tariff. It depends on some factors. They are type of vehicle, age of vehicle, tenure of coverage, discount, loading, IDV.
Document for filing of claim. These are the following documents which you see on the screen you need while filing a motor insurance claim. Following are the documents and a detail you should be ready while filing a motor insurance claim, that are proof of insurance, policy document or the cover note which mention your policy number, engine number and classes number. Accident detail like location, date and time of this accident. Plus document requiring for insurance claim settlement you need RC, registration certificate, TC, driving license, PUC, pollution under control certificate, originally received bills of repair in case of reimbursement claim. You also need a copy of your duly signed claim form. You need FIR certificate only in case of theft, injury, damage to the third party or the highway accident. The next is condition for claim. These are the following conditions which mention while filing a motor insurance claim. Claims under the motor insurance policy could be for personal injury or the property damage related to someone close. This person is called a third party in this context. Generally, there are no restrictions on the number of claims you can make under the insurance policy in a year. However, one should remember that the insurance claim effect, the NCB, stand for no claim bonus. Repeated claim in a year may also increase the premium when you renew the policy. So we conclude that the owner of the vehicle is legally liable for any injured or a damage to life or the property caused by use of this insured vehicle. Motor insurance protect the owner of this vehicle against the damage to the vehicle and also pay for any liability owned by the vehicle owner as per as the law. Cover for the third party and personal injury protection are the silent feature of motor insurance policy. Motor insurance are not yet popular as compared to the health insurance in India.
Hi, I'm Jack. I just bought a house to give my family a better place to live. I want to take out my family for a holiday, but I was worried about the house.
I know, recently in our neighborhood, a house was caught on fire.
How am I supposed to leave the house without any worries?
Small matter, dear, just buy a fire insurance for the house.
What is fire insurance?
Fire insurance is a specialized form of insurance beyond property insurance and is designed to cover the cost of replacement, reconstruction, or repair beyond what is covered by the property insurance policy. Advantages of fire insurance: aids the planning process in business, prevent families from experiencing the hardship, provides payment for unexpected losses, allow family to continue their life routine after losses.
Okay, so how and when was the fire insurance established?
History of fire insurance. The real establishment of fire insurance came only after the Great Fire of London in 1066. This fire lasted for 4 days and nights, burning over 436 acres of ground and destroying over 13,000 buildings. Was the most disastrous fire in history and possibly awakened the people to the necessity of a protection against such calamities.
Oh, okay. But what are the types of fire insurance?
Types of fire insurance policy. Comprehensive policy is also known as all-in-one policy. It covers losses arising from many kinds of risks such as fire, theft, third-party risks, etc. Flooding policy. It covers the property lying at different places against loss by fire. An average loss will always be there in a floating policy. Specific policy. Under it, any loss suffered by the assured is covered up to a specific amount which is less than the real value of the property. Adjustable policy is issued for a particular period on the existing stock. The premium amount is paid in full at the time the policy is taken. Valid policy. Under this, the insurer agrees to pay a fixed sum of money irrespective to the amount of the loss to the insured.
Also, let me enlighten you with a few other characteristics of fire insurance.
First, fire insurance is a contract of indemnity. Second, fire insurance is a contract of good faith. Third, fire insurance policy made for 1 year only.
Now, coming to the conclusion, check this out.
Conclusion of fire insurance. After knowing the brief history, types, perils, associated advantages, barriers, and precautions of fire insurance, we conclude that there is no way to face the risk of fire or to completely eliminate the factors of fire, but we can be saved from the damage.
Greetings to everyone. Today I and my teammates are going to talk about accident insurance. Accident insurance is an insurance in which the policyholder is paid directly for any accidental injury. It is a complementary, not a replacement for health insurance. Moreover, the insurer keeps a list of events and circumstances which voids the enlistment of insured's insurance benefit. For example, any injury received by to the insured due to his involvement in an illegal activity. In such a case, accident insurance is not available. Thank you.
Before you decided to get a personal accident insurance, it is useful to understand the key features.
This policy covers in case of unfortunate events death of the insurers due to an accident. The nominee is entitled to the entire sum. The policy even provides covers for permanent total disability, permanent partial disability, and temporary total displacement. Certain policies also provide due to an accident as well as the cost of transportation of a mortal remains in case of death. Thank you.
The importance of accident cover will give you a family financial protection in the form of accident composition and ensure that the financial security. The insurance company pay off 100% composition in the event of death. The family member can be used the amount pay off the liability, if any, and maintenance the usual.
The objectives are the significant rise in deaths and disabilities due motor vehicular accident is alarming. Every other day, a person is found to be a victim of vehicular mishaps. One leaves the house to come home and spend time with family, not on some hospital bed or behind bars. The primary purpose is to protect temporary or permanent reduction in income arising out of accidents. It covers permanent disability like paralysis and loss of limbs and temporary disability like fractures. The premium depends on an assessment of risk at the workplace and the extent of coverage.
Of accidental insurance are first one is death and dismemberment insurance. Death and dismemberment insurance is a key type of accident insurance. These are the insurance which are very beneficial and they are inexpensive. The benefits they provide are applied on any type of life insurance. You must note that or you must realize that death caused by illness, war, or old age would not be recovered in this insurance, and this insurance also called as double indemnity insurance law. Second one is general accident insurance. Not all accidental insurance are limited to the event of death and dismemberment of a policyholders. These policies are those which give a lump sum amount of money to the policyholders by a set number of payments or set number of years the payments are provided. You can also add readers to this insurance such as ambulance charges and hospital facilities, etc. The third and the last one is disability insurance. Disability is basically a form of accident insurance which is provided on the workplace by the employer to the employee. If you are self-employed, you may wish to have it.
Advantage provides to your family and loved ones. There are no external test and document needed to over and above the current condition. Extensive coverage at much affordable rates. They are available in two categories, self and family. It offers worldwide coverage, easy and seamless claim process. Support center available on all days and around the clock. You can customize the policy to your specific needs.
Some of the major exclusions include suicide, self-injuries, natural death, pre-existing disability, childbirth or pregnancy, non-allopathic treatments, the influence of intoxicants and suffering from any mental disorders. No claim is paid for pre-existing injuries under a personal accident policy.
Concluding this video, I would like to share this information that accident insurance provides financial help during a medical emergency. One does not have to use save money or take loans to pay hospital bills. If they proactively buy health insurance as any medical emergency is unpredictable, be it a health issue or an accident, buying a personal accident cover with a base health insurance policy will extend the coverage to include the full cost of medical treatment against accidental damage. For example, accidentally falling from a great height, drowning, etc.
Business interruption insurance covers you for the loss of income during a period when you cannot carry out a business as usual due to an unexpected event. It is an insurance aims to put your business back in the same trading position it was in before the event occurred.
Which businesses need business interruption insurance? And the answer to this is every business could benefit from a business interruption policy. Here are some types of businesses which could benefit from a business interruption policy. That is landscaping business, photography business, food, restaurant business, canal business, construction business, and any startup can be benefited by this policy.
Business interruption happen because of theft, wind, fire, lightning, which is natural disaster as well as human interruption. Business interruption policy is one type of a protection umbrella which protect businessmen to cover losses. In this policy, it mostly cover loan payment for the business lost income, expense and many more.
Types of business interruption covers. First point is gross profit. Gross profit insurance is a type of lost profit if an insurable event occurs. Second point is additional cost. This can include operating expense and other costs. Third point is book debt. Book debt insurance covers cost of records. Fourth point is claim preparation cost, which includes lost revenue, employee wages, taxes are the example. Next point is fine or damages. Insurance that covers replace income cost in the event. Sixth point is redeployment cost. And the last one is severance and redundancy payment. Severance pay is the largest package that includes redundancy pay. Thank you.
Cost for a business interruption insurance policy cost between $40 and $130 per month, and for per year it costs $500 and $1,500. But coverage can cost significantly more for high value business with high liabilities, and also depends upon the location and number of employees and such more.
How much business interruption insurance coverage do we need? Every business interruption policy has a coverage limit. Choosing a good coverage amount is essential because you will have to observe any financial losses above your coverage limit. You have to consider these factors. How long will it take to get the business up and running after a disastrous problem like a fire? How much will it cost to rent office space in your area, and is space readily available? Look at your gross earnings and earning projection as guidelines for the right amount of coverage.
Protect your dreams with the right coverage. In business, sometimes you need to take risks to achieve your dreams, but going without business interruption insurance should not be one of them. After a catastrophe or other disaster, 40% of the businesses do not reopen and another 25% fail within a year. Business interruption insurance can help keep small business owners' big dreams on track with coverage for things like lost revenue due to closure, fixed expenses, and cost of operating from a temporary location. What to do when loss occurs? We should report the claim as soon as possible and then measure the business income loss. We should identify extra expenses. We should develop and execute a loss mitigation plan and then collect and maintain supporting documentation.
Now let's see how long does a business interruption insurance coverage last. It takes at least a 48 to 72 hour waiting period to claim the policy after the loss, which is covered by the insurance. The loss will be paid according to our restoration period. Restoration period is the length of time in which the insurance company is liable for loss of income. So our insurance payout will be given accordingly. What all things are not covered by the business interruption insurance? There are some exclusions, that is damage from flood or earthquake, because both require separate insurance policies, undocumented income which is not listed in our financial records, utilities because they are usually shut off when a business is under repair, and communicable diseases that caused a shutdown of the business.
Hello everyone, this is Prabhati Ojha from TYBBI. Here I am to brief you about home insurance. Before we proceed to understand what is home insurance, let us first define home. Your home is your life's most expensive asset. It provides shelter not only to you and to your loved ones, but also have everything that you have collected over the years. So insuring your home is really for peace of mind and security against a foreseen financial impact. Now let us brief about what is home insurance. Home or dwelling or premises means insures private residence, which is used or occupied mainly for domestic purposes by insured or insured's family or individuals, domestic staff, whether owned by insured or insured's family.
Home insurance, also commonly called homeowners insurance. It is a type of property insurance that covers a private residence. It is an insurance policy that combines various personal insurance protection, which can include losses occurring to the home its contents, loss of use, additional living expenses to or loss of other personal possession of homeowner, as well as liability insurance of accident that may happen at home of the hands of homeowner with the policy duration. Additionally, homeowners insurance provides financial protection against disaster. A standard insurance policy insures the home itself, along with the things keep it inside.
Structural insurance. The structural insurance covers the losses or damage against the structure of your home in case of man-made or natural calamities. The structure of your home is covered under reconstruction value basis and not under market value basis. Structural insurance includes foundation wall infrastructure that is embedded in the structure, boundary walls for independent row house and bungalows, flooring, ceiling and pillars, pump house, underground and overhead tanks. Coverage. 3 primary covers are offered for structure in home insurance: fire and special perils, earthquake, terrorism. Tenure. Home insurance structure policy tenure option is from 1 to 20 years of duration. Sum insured. The sum insured is calculated by multiplying the build-up area and the cost of construction per unit area. Understanding your specific needs and opting for comprehensive home insurance policy to help safeguard your finance and assets in case such as unwanted visitors as disasters come calling.
After structure, there is other type of insurance, that is content insurance. Content insurance policy covers losses to the contents of your home due to any natural man-made calamities or burglary. Home content that are covered in this policy are first, durables, for example TV, refrigerator and other appliances. Second, furniture and fixtures, that are tables, cupboards, fans, lighting, etc. Third, miscellaneous items, that are consist of interior decoration, clothes and so on. Fourth is jewelry. 4 primary covers are offered for structure in home insurance are fire and special perils, earthquakes, terrorism, burglary and theft. Home content insurance policy tenure option available are for 1 to 5 years of duration. In this policy, sum insured will be calculated using the market value. Market value is the value for the new item of the same type and makes less depreciation depending on the age of the item. Formula of calculating sum insured is durables plus furniture fixtures plus miscellaneous items plus jewelry.
Home insurance policies protect your home against the man-made and natural disasters. Perils covered under home insurance policy are fire, add-ons, burglaries and personal accidents. Damages or losses occur due to fire, explosion, lightning, flood, cyclone, tornado, inundation, aircraft damage, subsidence and landslides occur or covered under special perils and fire insurance policy in the home insurance.
Add-on coverage. Add-on cover are the extension to the basic fire and the special perils policy. It covers any loss of damage your homes against the earthquake or terrorism. Additional expenses to rent and alternate accommodation are covered non-manufacturing premises only in the case where the premises become untenable and a result of occurrence of perils insured in the policy. Burglary. Burglary means an act involving the unauthorized entry to the exit from the insured homes by unaccepted, possible, visible and violent means with the intent to the comfort act of the theft. Burglary provided cover to the household content. Examples including electronic equipment, household appliances, jewelry, valuable interior decoration, furniture, fixtures and fitting.
Personal accident coverage is applicable only to the insured. It provides coverage to the insured against his death or total disablement arise due to an accident.
3.
Following are the exclusions of person accident coverage: intentionally self-injured, suicide or attempt suicide, under the influence of intoxicating liquor or drugs, directly or indirectly caused by venereal disease or AIDS, engagement in dangerous sports.
Documents required at the time of claim settlement. Duly filed and signed claim form, copy of policy, copy of first investigation report FIR or non-traceable report NTR by police, final bill of repairers, invoices of the suppliers for replacement, invoices of owned articles if required, proof of rent in dwelling and dwelling taken up as alternative accommodation, rent agreement, medical officer certificate for death or disability, postmortem certificate wherever required. Thank you.
Hello everyone, my name is Harshavasti and our today's topic is general insurance. So what is general insurance? General insurance is typically defined as any insurance that is not determined to be a life insurance. It is also called property and casualty insurance in United States and Canada. General insurance is also known as non-life insurance policies that includes automobile and homeowners policy. It provides payments depending on the loss from a particular financial event. General insurance covers property against fire, burglary, theft, flood, storm, earthquake, and so on. It also covers machinery against the breakdown, hull of ships, and motor vehicles against damages and etc. General insurance covers almost everything, including your home, your car, and your health. And these policies are easy to purchase online. Okay, so what is an insurance policy? An insurance policy is a contract made between a policyholder and an insurance company. And in an agreement of paying a premium amount on a regular monthly basis for a certain period of time, a person or his or her beneficiary receives the coverage.
I am Nikhil of class TYBBI and today I am going to explain you about car insurance. Car insurance is a contract between you and the insurance company that protects you against financial loss in the event of an accident or theft. There are three types within an car insurance: liability, collision and comprehensive. Comprehensive is the best amongst all the three because it provides the insurance for the car damaged and to our car which is damaged too. We need this insurance to protect us from unforeseen events and unplanned liabilities. Any problem can occur unknowingly, like car accident or engine failure or theft of the vehicle. If we have car insurance, then the policy will be a savior. Nowadays, there are many online apps to buy car insurance like Echo Insurance, Bajaj Alliance, Insure and many more.
Liability insurance. This insurance is purchased to protect an individual or a business. It is a policy that offers protection to businesses and individuals from risk. This insurance policy protects the insured from legal payouts and costs for which the policyholder is deemed to be responsible. It also covers the risk of property damage, bodily injury to third party, being held legally liable to negligence. It covers legal payouts and costs for which the person insured will be held responsible.
Fire insurance is a legal contract between an insurance company and the policyholder, which guarantees that any loss or damages caused to the policyholder's property in a fire will be paid by the insurance company. Fire insurance provides coverage against incidents of accidental fire, lightning, explosion, etc. It goes beyond property insurance and covers the cost of reconstruction, the cost of replacement, and the cost of repair. The insurer is liable to the actual amount of loss not exceeding the maximum amount fixed under the policy.
Engineering insurance. Engineering insurance refers to the insurance that provide economic safeguard to the risk faced by the ongoing construction project, installation project, and machines and equipment in project.
today I would like to start our presentation for the day, which is on ULIP. So ULIP, what is ULIP? ULIP is a unit-linked insurance plan which provides two goals in a single product, which is insurance and investments. So it has a lock-in period of 5 years. Hence, the ULIP has to be held for 15 years or more, since both the mutual funds and investments are long-term investments. So ULIP was first set up by UTI in 1971 and further by LIC in 1989. ULIP helps us to reap the benefits of stock market, funds and debts. Also helps us or provides us life cover benefits. Let's start with the pros and cons for the ULIP. First, long-term goals. It is bound for us to be held for the longer period of time to achieve longer and higher benefits. Switching. It gives us a liberty to switch between mutual fund and equity debt. Tax benefit. ULIP is eligible for deduction under Section 80C. Cons. Benefits of standalone plans. Thus, both life insurance and mutual funds separately have higher benefits than of a single ULIP. Returns are compromised at times, and also returns are sometimes volatile. Thank you.
Everyone, today I am going to discuss with you types of ULIP plans, where I will tell you which one is better for you to invest. So let's get started with the explanation part. And there are majorly three types of ULIP plans, and the very first one is equity fund. What is equity fund? This type of ULIP fund invests its shares in companies listed on the stock exchange. These funds are suitable for those who have high risk aptitude and want to earn high return over a longer period of time. And the second one is debt fund. What is debt fund? This type of ULIP funds invest in bonds of government and private companies. These funds are considered to be a low risk product that can provide a stable return. Then the third one is balanced fund. What is balanced fund? This is a mix of equity and debt fund option. They aim to combine both stability and return aspects of equity and debt respectively. These funds are suitable for those who have moderate high risk profile. Thanks so much for this.
Myself, Anushka Rahul. The things to keep in mind before selecting a ULIP plan. The first and the foremost thing is that you need to assess the funds you have in your hand and what is the goal you want to achieve through this investment. You should consider investing in ULIP for long-term life goals or
of government and private companies. These funds are considered to be a low risk product that can provide a stable return. Then the third one is balanced fund. What is balanced fund? This is a mix of equity and debt fund option. They aim to combine both stability and return aspects of equity and debt respectively. These funds are suitable for those who have moderate high risk profile. Thanks so much for this.
Myself, Anushka Rahul. The things to keep in mind before selecting a ULIP plan. The first and the foremost thing is that you need to assess the funds you have in your hand and what is the goal you want to achieve through this investment. You should consider investing in ULIP for long-term life goals or any other life goals that does not require premature withdrawal or redemptions. The charges levied in that case will neutralize your gains or even make it negative in some cases. The second thing is risk appetite. You should assess your personal risk appetite to help you know which is the best ULIP you should go for. An equity fund ULIP will carry a higher risk than a debt fund ULIP. The third key element is the charges. It is essential for you to know the product and look at all the charges levied to understand where your affordability lie. Thank you.
So the first point is premium allocation charges. This means that before your ULIP investment gets apportioned between the insurer and the insurance, some money is deducted as the premium allocation charges. The second point is fund management charges. These charges are deducted by the insurer for managing the funds in your ULIP plan and are kept at 1.35% by RDAI. The third point is mortality charges. These charges are levied by the insurer to manage the insurance bit of the product. The calculation of the charges depends on the insurance age, health condition and the duration of the life insurance policy. The fourth point is policy administration charges. As the name suggests, these charges are deducted to cover for the order administration work done by the insurer in maintaining your policy. The fifth and the last point is switching charges. Your insurer can levy charges on you in case you want to switch between the funds in the investment portion of ULIPs. For example, if you invest in an equity fund earlier and now you want to switch to a different fund, the insurer can levy switching charges.
Hello everyone, I am Bhavik Deshmukh from TYBBI. Now we've come towards the end of our event, Insurance MELA 2022. I would like to thank our principal, Dr. Koel Roy Chaudhary ma'am, for granting us permission as well as the blessings for this successful event. Next, I will thank my BBI department faculty, Ms. Bhumika Bure ma'am, Ms. Lata Lokhanya ma'am, and Mr. Perumal Ramasubramani sir for their guidance and support toward the success of this event. Next, I would like to thank my organizing team members and my batchmates for their creativity, utmost dedication, and hard work for Insurance MELA 2022. Last but not the least, I would like to thank you for your presence throughout. This would not have been possible without an amazing and interactive audience like you. So, thank you so much. And it's almost 11 noon, so I'll take your leave. Have an amazing day.